Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 10th of April 2026. First chart is the S&P ASX 200 index. This is the parent index of the Australian Stock Exchange, the XJO. And after we saw a little period of consolidation and perhaps absorption over the last few weeks, price has pushed higher in response, partly due to the financial sector, which is the largest sector in the Australian Stock Exchange by quite a considerable margin. Highs of the range up through here. I think this might be the stronger level just here. Supply was drawn out on this bar. So there is still some gap between the highs of this week's bar and the highs of the range. This week's bar may have been a little over-exaggerated due to the strength in the financial sector. You'll note that many of the other markets actually only pushed slightly higher here and not quite as strong as this bar. And due to that, I would probably expect this market will attempt to consolidate over a few days next week, while the rest of the market perhaps attempts to catch up. And I'm not actually expecting a strong push to the highs of the range, at least not early in the week. This is the mid-cap sector. You can see the mid-cap sector, while it did push higher this week, you've got the breakdown line here, and this market's still below the breakdown line. There was a period of consolidation down here in a similar fashion to the parent index. But this market's certainly lagging behind where the parent index is, which is up sort of at this level up here. So there was some strength still seen in this market, although volume was reduced, possibly due to the shortened trading week as well. But the market did push higher from this period of consolidation down here over 3 weeks, and it's moved almost up to the breakdown line above. Similar here, I expect there'll be a little period of consolidation in here early in the week next week. And if supply is found to be low, there may be a challenge to this level later in the week. Remember that this congestion to the left here is likely to contain some supply, and that'll cause resistance to price when it does attempt to push higher and above this breakdown line. So the market will need to see an increase in volume in an attempt to absorb that supply coming from the left when the market does attempt to push higher and above that breakdown line. This is the small ordinary sector. You can see there was a more muted response here, even though volume was still pretty good, about average overall. You can see the period of consolidation here in the background and only a muted attempt to push higher. There's the breakdown line above. You could draw a line through there as well, and the market does seem to have respected that level to some degree. So this being an older level compared to this one, this is the stronger level in here, no doubt. When you get the option, you generally take the more recent level, and there will be some influence at this level, but it will be reduced compared to this level here in the background. So price has pushed up to that level. It was possibly not as strong as it could have been. This market may be a little more tentative at the moment. It's often more volatile than the two larger markets we've just looked at. Similar to those other markets though, a little period of consolidation in response like this prior to any attempt to challenge the breakdown line. Remember, of course, that these markets are still very reactive to overseas markets and overseas news, and I expect they'll remain so for the foreseeable future. This is the financial sector, and it's pushed higher quite strongly this week. Highs of the range through here. You've got this level up here as well, which will form sort of like a zone but supply was drawn out here. The market was still strong here. So you can pick and choose. I generally look at that as a zone overall. The market's pushed up to that level and it's closed right in it. This week's move was in response to this shakeout, absorption bar, test for supply, secondary shakeout, and then a push higher. So this is good strength being formed here. We looked at it over the last month. There was a question whether any weakness had emerged on this bar. We had another shakeout last week. It's a secondary shakeout. Here was the primary one. This was strength forming, and this week's shown you the response to that building strength in the market, and price did push up. Volume was about average despite it being a shortened trading week. So this was a good strong move, and this bar is standing tall and proud, and that's what you like to see. I do expect the market will at least consolidate for a little bit early next week. That's what generally happens in response to a widespread up bar. And if supply is found to be low, there'll be a secondary attempt to push higher. If supply continues to be drawn out, you may see the market pull back a little more deeply to challenge that supply. This is the ASX metals and mining subsector. Price did push higher again this week and closed above last week's high. The last 2 weeks bar is almost like a single bar where 2 weeks ago price pushed up, some supply was drawn out as it faded lower on an increase in volume, and the distance between the close and its high was then recovered this week in a secondary attempt to push higher. I often think of those bars as one single up bar. It's just taken 2 weeks to form. So that was a stronger move. Happy to see it. Price is now trading within the range of where this weakness emerged about 6 weeks ago. Volume was almost back to the average, which is quite good considering it's a shortened trading week. And following a little period of consolidation, you may see this market attempt to push higher as well. This is the ASX gold sector, very similar to the previous chart, where the market's formed what I think of as a single bar over 2 weeks. Here's the breakdown line in the background, and prices moved pretty much exactly up to that level over that 2 weeks. Volume was reduced and below the average. It was a shortened trading week, but so was the previous week. So a little bit of volatility has been taken out of this market, and prices pushed up to the logical level with relative ease. So I guess those who are going to sell when weakness emerged up here have done so. We saw 2 weeks ago this is a consolidation bar, absorption bar. This was the market building strength. We saw the response to that last week with an up bar that closed in the middle, and then the distance between the close and the high was then recovered this week, making a single up bar, which is pretty much formed over 2 weeks. This is the energy sector, and after a pretty substantial push higher over the last few weeks, the market has finally pulled back, although the mid-bar close does show you that there still is quite good support in this market. Volume, while reduced, remained about average, which is pretty good and strong for a shortened trading week. This market's very reactionary to the overseas news and overseas market trading at the moment, and I expect it will continue to be like this for some time. The market's likely to consolidate in here for a period, but once again, it will react strongly to overseas news at this point in time. So it can be a little dangerous to trade. A break below the lows of this bar would certainly be quite weak. And you've got this period here where the market was consolidating previously. And a push above that would be quite strong. This is the healthcare sector, which has been a very disappointing sector more recently. Price appeared to have been building strength and consolidating, only to fail quite a number of times previously, and we're sort of at that level again now, where we saw a month ago this increase in volume here, and then the market's traded within the range of that bar, potentially absorbing supply and building some strength. But we've seen this before, and the market has broken down previously when the market was building strength or appearing to do so in the background. So we're once again in this same position. We've seen an attempt to support the market on this bar. Now the market's trading sideways and appearing as though it's absorbing supply and potentially building strength. But we need to see a proper breakout that is supported and continues to push higher before you really want to get too involved in this market. This is the ASX industrial sector. We noted that this market had begun to consolidate over the last couple of weeks in here. This bar here 3 weeks ago rejected moving lower. You had an absorption bar last week and prices pushed up this week, pretty much making a single bar over 2 weeks, where the market recovered the ground between last week's high and its close this week. You've got a breakdown line above coming through here. So that's going to be some sort of resistance there. And if the market does challenge it, I'm expecting there will be supply drawn out from the left through here. So it's going to take quite an effort to push through. Perhaps the market will choose to grind higher over time instead of thrusting higher and just push higher like this, taking the form of bullish absorption rather than one great push higher. This is the ASX consumer staples, quite a defensive market, and you've got the highs of the range through here, and prices pulled back a little this week, partly due to the fact that markets were a little more buoyant this week and feeling a little more positive. So there was some supply drawn out of this market to move into some of the other sectors. Price is still quite strong up here though. So it's not as though this market is particularly weak right now, just that something's been taken off the table and probably rotated into one of the other sectors at this point in time. The mid-bar close shows that there was still some support off the low, but there was some supply drawn out from the highs of the market. This is consumer discretionary, and this market saw a tentative bid over the last couple of weeks through here. Thrust was shortened. Some strength was built up here, and the market just pushed higher this week. It's not a strong push higher. It did close slightly off its high, so there was even some supply drawn out from the left here. Volume was still reduced. It was a shortened trading week, but it was shortened the week before as well, and it was reduced over that. So there's no great strength being seen in this market, and there is still some supply being drawn out. So this market remains muted at best compared to some of the other sectors. This is the ASX property sector, and similar to consumer discretionary, price has been building a little bit of strength down here over the last few weeks. It did push higher on about average volume, which is quite good for a shortened trading week, and it's pushed above this little period of consolidation, so that was good. Got the breakdown line up here, secondary breakdown line up there. So there's plenty of room for this market to move, and it did close pretty much at its highs for the week. So a little stronger than the consumer discretionary market, which closed off its high. I do expect the market will probably consolidate a little bit early in the week, just to see if there's any supply being drawn out. And if there's not, you may see an attempt to push higher. Just back to the parent index quickly. You've seen the other charts now, and you can see this market really did benefit from the strength in the financial sector. Here's the breakdown line in the background. You can see that if you have a look at the mid-cap sector, here's the breakdown line in this sector. The market still remains a little below that level. You go back to the parent index, which gained the strength from the financials, the strength in the financials, which isn't reflected in the mid-caps. And you've got the breakdown line through here. The prices pushed considerably above that level. Highs of the range through here in a zone. I expect this market will likely just consolidate a little in response and then push up to the highs of the range if supply is low and trading conditions are favourable. And if trading conditions aren't favourable, or if supply is drawn out, there'll be a slightly more deep pullback, probably back in this zone in here, remaining above this breakdown line, I expect. Okay, thanks for your time. Back again next week. See ya.